On the first video in this series, the one titled Introduction to Forex, one person left quite an interesting comment. He said, and I quote, "Predictable my ass." Now, I don't know what his donkey has to do with the predictability of the Forex markets, but I assume that he was implying that Forex is inherently unpredictable. If he's correct, we may as well all give up trading right now and find another way to earn money, as no small trader could ever hope to succeed if the market is indeed totally random. But I believe that the Forex market, like any market, is indeed predictable, and by that I mean that in certain circumstances, the odds of the price moving in a particular direction become strong enough that I would risk money on it doing so. After all, that's what trading is. But what makes it predictable? Well, it's the fact that it's traded by human beings. And I'm not talking about Forex being an exercise in mass human psychology as stock markets tend to be, because as I said in an earlier video, most of the money traded in Forex is done so by a small number of large players, such as central banks, investment banks and hedge funds. The actions of the huge crowd of small retail Forex traders really don't amount to much. It's what the big guys do that counts, as they're the ones who have the muscle to move the market. And these big traders are not new to Forex. They've been trading currencies for decades. They know exactly what they're doing, and they're exceedingly good at it. And when they've decided which way they want a currency pair to move, they'll be patient and they'll wait until they can get their orders filled at the best possible price. That's how good traders behave in any market you care to name. Let's take bananas, for example. You can see on this chart a pattern of peaks and troughs. So if you are going to invest in bananas and go long with a buy trade, it's pretty obvious as to where you'd be looking to buy. Not here or here, but here. And here is where you'd be looking to sell. All you need to do is look at the chart and determine the price at which bananas are considered cheap and where there is buying support, and then wait for the chance to buy at that price. And although Forex charts are undoubtedly more complex than a banana chart, the same principles apply. The big traders are waiting to fill their orders at what they deem to be a fair price, and these price levels form what are commonly called support and resistance zones. Now, I should mention that a few years ago I created an indicator to automatically draw support and resistance zones in MetaTrader. However, I no longer use it. Why not? Well, because it's an indicator that tries to do your thinking for you. I went to a lot of work programming an indicator because I was lazy at heart. And I realized one day that I was much better off putting in the work myself, analyzing the charts using my own brain rather than a program doing it for me. So let me show you how I go about finding and identifying support and resistance levels on a chart. And this is something that anyone can do. You can do it for yourself. It's really quite simple. All right, now this is the pound versus the US dollar. It's just the default template. So the very first thing we're going to do is go right out to the furthest time frame, which is monthly. And I'll zoom out. That's as much data as I have available with this broker. It takes me back to 1994. If your broker doesn't show you this much data, and some brokers don't, they'll just show you a much smaller sample of historical data, then I would suggest finding another broker, at least in terms of being able to analyze charts. You've got to be able to see the past if you're going to draw these levels. Okay, so what I'm going to do at the very start is I need to draw a rectangle, but there's no rectangle up here. Now, I could do it by going Insert, Shapes, Rectangles, but that gets pretty clumsy. I want the rectangle on this toolbar. So to get that there, I'll right-click here, anywhere on this toolbar, and go Customize. What I don't want the equidistant channel. That can go. There was text label, which I've already removed because I'm not interested in that either. Scroll down this list on the left, and there's rectangle. Insert that. And I'm done. I now have it here. Very easy to use. Now, as I've got a dark background, I've got a very dark color for the rectangle. It is navy. Okay, so if you put a light color, it's just far too bright by contrast. If you've got a light background, you've probably got more choice, but I prefer the dark background. Okay, so I've drawn it there, and I've drawn it with the price penetrating part way through it. Why would I do that and not, say, draw it like this with the price exactly touching it? Well, because these zones are not explicit levels. Like when the price hits it hits it with a lot of momentum behind it until the selling can overcome the buying. So these levels are much more elastic. There's a bit of give. It's not like a brick wall that just repels a ball that hits it. It's more like an elastic net where the ball hits it, bends the net back, and then the net springs it back the other way. So drawing it like this, I think, is far more useful when it comes to identifying support and resistance zones. They're approximate in their nature. They're not explicit down to an exact price. Okay, so That one there is at the extreme where the market has turned at the very top. Down the bottom, we could almost do that, except the price has now busted through a level we could draw here. I'll draw it anyway. As you can see here, it starts out with the price touching, trying to push a bit further through and then moving up. But here it pushes quite a bit further down before again finding support and running up. And I'll stop it there. Lastly, here it's touched before being broken. The level will still be alive though, and I'll explain why that is in a moment, or with this next level that will demonstrate it. Over here, have a look. We've got resistance, resistance, resistance 3 times. This zone here was tested for resistance, and then when the price came back, it pushed hard through it. I'll just pull that down a bit further because to encapsulate that touch there, where again it acted as resistance. But it wasn't enough to cause another big downtrend. Instead, the price came straight back to retest it again, and this time it didn't hesitate. But is this zone still alive? Well, yes it is, because if you have a look at the top, it's now tested it for support from the other way, and then run up further away from it, and then come back for a very strong test for support, and it starts quite another leg of the uptrend that started back down here. So you can see how the level has changed from resistance to support. And why would that happen? Well, if you think about it, when when traders are looking to sell, when the market comes back here, they'll go in short. But however, the momentum behind the uptrend is too strong, and they don't turn the market this time. Instead, when it comes back, they'll be thinking, here's a chance to get out of my short trade, which I don't think is going to work because we now are in an uptrend. So just by exiting a short trade at or near break even, they're buying back into the market, so that creates support. And furthermore, they might see it as an opportunity to reverse their position and go long. And so that very neatly explains why these levels can survive as long as they're cleanly broken. And I'll explain that a bit more in a minute. Here again, the price is broken very hard to the downside. All the support was used up at that stage, and there was none at this stage because this was the GFC and everything was very strongly pushing down. But again, it's still alive. The level is still alive when the price comes back to retest it for resistance. Holds its resistance down here, and again there. Quite a strong move up to test it, but again it doesn't. It holds. It can't be broken, and the price has fallen away. So that zone there is very, very important with the pound. It's right in the middle of its general price range, as you can see. If the price comes back to it again at some point in the future, I'll be very interested to see what it does when it gets there. Now, are there more levels I can draw like that on this chart? Well, there are a couple. Up here, for example, I've got resistance, resistance, and then the price breaks through to the upside, and long tails on these candles as they tries to push back in and then repels away. It's become support. Same here, support, 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 support until it breaks. So again, if the price comes back to this zone, I'll be very interested to see what it does. It could very well be alive if at some future point the price revisits it. Can I draw zones like that down here, closer to where the price is now? Well, no, not really, because it gets a bit messy. You can see there was support here, but it was broken by all this, messed up by all that pushed it lower, and that was pushed a bit lower again, and then the price sort of jumped up a fair way through it. So to be more precise, I'll leave that until I get in a bit closer to the chart. So now it's just a matter of stepping in closer. Here's a weekly, and again you can see that sort of stepping down of the support tends to be pushed further and further away, and then this messy sort of area here where it was broken. So I'll go in even closer again, down to a daily. Okay, now we can see here on this support level I drew on the monthly, a nice touch off it. You can see there was a bit of a zone a bit higher than it there. I'll just draw that in there. And then both of them were broken hard. And now this monthly zone is acting as resistance. As you can see, it's been tested on the daily chart before the price has fallen further away. And I could draw zones up here as well. I prefer to leave these smaller detailed zones until the price comes back to revisit it, rather than clutter up the chart. I'm only interested at the moment as to what's happening closer to the price. So down to an hourly chart we go. And here, this monthly zone is now a bit too complex and detailed for what we need on an hourly chart. Right, so if I go to the monthly and double click that, go to visualization, I don't want to see it from an hour and below. So yeah, that's all I need to do is just select those boxes And now when I go back into the hourly chart, it's no longer there, because I want to draw more accurate zones to help me with my trading here, because I often trade off the hourly chart or the 4 hourly. I tend not to go below those time frames, but hourly I find is a pretty good time frame to trade. So what can I do here? Well, here we can see there's this small zone I drew, and you can see it acted as support very temporarily in this very, very steep drop. You can see the price bounced off it hard with that candle there, but then it plummeted straight through, and then it's come back and very neatly touched on it for resistance. So even with such a very violent move as the Brexit vote, which is what this is, the rules of support and demand, the rules of support and resistance have held true. So they'll work even in very unusual market conditions as well as in normal market conditions. As an example, here, you can see this area here where it was support, and then the price gapped through it. Now a gap over the weekend, the traditional view on those gaps, the sort of old wives' tale that's repeated a lot in Forex trading circles, is that the market always fills gaps. And often it does, but then the price often goes everywhere on the chart that you care to name as well. For instance here, if you'd gone short saying the market's going to fill this gap, you would have had a 500 pip move against you before it came back and filled in your 40 pip trade. So it's not a trade that I generally recommend taking. Instead, what I'll often do is I look to see, was it actually support before it gapped? In this case it was. So I would draw a zone based off it, because I think the market will be expecting traders to try and fill the gap, and they'll be willing to sell into any moves that come back to that area, as indeed happened here and here. You can see quite strongly with candles rejecting the move up into the zone there, and that's something I'll look at in the next video. Can we draw some support zones here? Well, yes, there was support there in the initial Brexit vote. It pushed a bit harder down through it there. It held all through here until it didn't. So support, there, and now there's no real bullish push off it. It's just waiting until the next selling came along and pushed it through the zone, and now it's away. But when and if the price comes back to retest this zone, it could be a very good selling opportunity, depending on what the price action, on what the candlesticks themselves tell us. And that's something I'm going to look at in the next video. So, just to summarize, the purpose of drawing these support and resistance zones is to identify where the big money have entered their trades in the past, and also to show where the price is likely to turn and provide high probability trade entries in the future. The purpose of drawing these support and resistance zones is to identify where the price is likely to turn and provide high probability trade entries, and we're basing that logic on how the market has reacted off those price zones in the past. And if the big traders are willing to be patient and wait for the price to reach these zones before they enter trades, then we should be too. There's far more money to be made by copying the big guys than there is to be going against them in the other direction. And remember that these zones are approximate. They act more like an elastic barrier than a brick wall, and the more often a zone is visited, the more likely it is to break. When I learned to restrict my own trading and only consider entering trades near these zones, I immediately eliminated so many of the bad habits that plague new traders, and which I myself was plagued by when I first started with Forex. For instance, I no longer chased the price, entering in a hurry after the market started to move, from fear that I'd miss out. I won't think about new entries when the price is hovering in no man's land between zones. I won't enter long trades when the price is about to hit resistance, or short trades when it's near support. I'll know where to place my stop losses, on the other side of a zone, with take profits levels at the next zone. And if the zones are too close for a good risk to reward ratio, then I won't enter a trade. Simply by identifying these zones, I already have the skeleton of a trading plan in place. So in the next video, I will look at that next step, how to identify entry opportunities by looking at the candlesticks and what they have to tell us. And I'll see you then.